You're buying $1 million asset that's earning 37% annualized rates of return, or even better. With that, you have tremendous leverage. Now, we just look at a simple house, all right, and we buy it right. We put a 30-year mortgage on it. It's going to give us positive cash flow. We're going to reduce the debt every month that we make our payments. This is going to help us avoid taxes because we get to write off the interest and the expenses and everything associated with this house, and we gain appreciation. So what if we were to take that $100,000 that I showed you on that last slide, and we just invested it into this type of a property? Okay, now follow me. The cash flow from the income, right? So our payment is X, the rental is Y, and it produced an 8.2% on our cash flow. So $100,000 makes us $8,200 a year. That's an 8.2% rate of return. But every month that we make a payment, we are reducing the amount of debt. And so every year our debt goes down by 4.3%. But because we've now formed a business, we now get to write things off like interest, like expenses, like depreciation of the asset. The tax savings alone on that 100 grand is going to save us 13.4%. And appreciation. The property is going to appreciate on average anywhere from 3 to 5 to 7 to 11% rates of return. Now, in the last 3 years, most markets have seen 50 to 100% appreciation. Now, appreciation has slowed, but it'll bounce back. And if you look at the averages, a single real estate purchase can produce a 37% annualized rate of return. When you calculate everything in here, cash flow, debt reduction, the tax savings, the appreciation. So why would we take our $100,000, and I want to go back to this slide right here. Why would we take our $100,000 and invest it in a savings account or a 12% stock market anything, or even if it's something that's paying 24%, when simply the act of buying a single family home or a duplex or a triplex or a fourplex can produce for us a 37% annualized rate of return? Now, I'm of the opinion that you should have a diversified portfolio. So we should have some money in savings. We should have some money in stocks and bonds. We should have some money in our 401k. We should have some money in crypto. We should have some money in gold and silver, and we should have some money in real estate. I think we should be well balanced. But a lot of you are stocks, bonds, and savings heavy because you don't own real estate outside of your primary residence. And the question is, why don't you? It's the best investment out there, and right now is the best time to buy since 2009. Now, I've had conversations with people, and here's what I ask them. If you could go back at any point in history and buy real estate, when would you buy it? And they all say 2009, 2010, and that was a good time to buy. But the next best time to buy real estate, you guys, is right now, 2025. Again, inventory levels rising, interest rates are stagnant and stale, buyers are kind of avoiding the market, sellers are getting desperate, inventory levels are rising, prices are declining. Now's the time to buy. Also, the FHA just came out with a new product last November. I shared this with you in the November CEO, that right now, if you buy a duplex, triplex, fourplex as an owner occupant, you only need 5% down. Guys, right now you can go out and buy $1 million fourplex, get FHA financing, live in one unit, rent out the other 3, and you only got to put 5% down. That's 50 grand on $1 million investment. Oh, and by the way, you could ask the seller to donate 3% of that down payment, which would be 30 grand, which means 20,000 bucks. You're buying $1 million asset that's earning 37% annualized rates of return, or even better. With that, you have tremendous leverage.